Good morning. We will do sales today and when goods are returned by debtors to determine what is the effect on VAT. The business must be registered as a VAT vendor, otherwise they can't claim VAT back from SARS and they are not allowed to collect VAT. So as soon as you see that the business is a VAT vendor, then you know that you will have to collect 14% on all your income and sales. Okay, the first entry is sold goods to else for 1026. Included in that 1026 is VAT. So the amount that the business wants is included in their sales price plus the additional 14%. So the first entry that we will do is to record the sales, but we first have to do a calculation to determine what is the VAT portion and what is the sales portion. Okay, they said to us that the total amount is 1026. This sales price includes the VAT. Therefore, this amount equals 114%. The sales figure is 100%. That is what the business wants for the goods. So if I want to calculate what portion of this 1026 is income for the business, I take the 1026, multiply with the one that we want to find out, the 100, divide by 114, and that will give us 900 Rand. Then we also have to find out what is the value of the VAT. VAT is 14%. The total amount given was 1026. That equals 114%. So if we want to calculate the VAT, the one that we want 14 at the top, the one that was given 114 at the bottom, and that will give us 126 Rand as VAT. So when we record this entry, we will show that the debtors increase with the total amount. So the debtors will increase with the 900 Rand sales price of the business, and they also owe the 126 Rand VAT to the business. The sales income account will be credited only with the amount that belongs to the business, the 900 Rand, and VAT output will be credited with the 126 to show that that is the amount that's outstanding and that must be paid to SARS. If you look at the percentages, because the debtors control includes the sales price and the VAT, it is 114% account. The sales account can never include VAT because the VAT doesn't belong to the business. Therefore, the sales account is 100% account. VAT output is only the 14% that belongs to SARS. So this is a 14% account. Okay, then our second entry, they said issued a check on the 1st of April to SARS to pay the outstanding VAT. That means that we have to pay the full amount that we're supposed to collect from the debtors in the future, and we will issue a check, so bank will be credited and VAT output will be debited. What is the implication of this? Although the debtors haven't paid their account, the business is responsible to pay out the VAT to SARS as soon as they've sold the goods, not when the debtors pay for the goods. So they've already paid this debt at SARS now, but they haven't received the amount from the debtors. Our next entry is where we issue a credit note because else is returning goods. So he's returning goods worth 342 Rand. That 342 is the original price that he paid for it. That means it included the VAT. So therefore, again, I have to go and do a calculation to determine what amount is VAT and what portion of that amount will reduce my profits and will be sales returns. So the total returns is 342 Rand. That figure equals 114% because it's the 100% of the price that is returned to the business plus the 14%. So if we want to know with how much profits our business will reduce, then it means we have to work out what is 100%. So the 342 divided by the one that we want to know 100 over the one that we know, so we divide by 114 and that will give us 300 Rand. That output is the 14%. So to calculate it on the total 314, the one that we want to calculate is 14, divide by the one that we know, the 114, and that will give us 42 Rand. So this 42 Rand means that we didn't collect this portion of the VAT on behalf of SARS. So we can now claim it back. So if we go back to this entry here for VAT output, how much did we pay out to SARS when we sold the goods? 126 Rand. That was on the total sales. Now, because this customer returned goods, we are not going to receive this 342 Rand from the customer. What is included in the 342? The 42 Rand VAT. So it means that I can now say that I don't have to pay this 42 Rand to SARS anymore. So I will go and debit the 42 to show in future I will claim this amount back from SARS. If we record this entry, we have to show that the debtors reduce with the total amount, with the 300 and with the 42, the 342, because that is the price that they originally paid. 300 will reduce our profits and will therefore go into the Debtors Allowances account. Just as sales is 100% account, the Debtors Allowances will be 100% account because you're not allowed to add that in your own income and expenses account. The 42 Rand will go on the debit side of VAT output to show that you can claim that money back from SARS. So what did we learn today? Is that when we sell goods, we charge VAT on the goods, and this VAT that is collected on behalf of SARS must be paid over to SARS. So it is a liability to the business until they pay it. The problem is that the business will have to pay over this VAT even if they haven't collected the money from their debtors. When goods are sold, the total VAT is therefore paid immediately to SARS. When a debtor returns goods, it means that you don't collect the VAT anymore because they're not going to pay the full amount that you originally paid to SARS. So that means on sales returns, you can work out how much VAT was included in the figure and you can claim that back from SARS.